NVIDIA, one of the greatest companies of all time, just announced a 10-for-1 stock split. And there are 4 super important things you need to know about this before you go out there buying NVIDIA stock because of the stock split. There are so many important things to understand about stock splits before you make any decision based on that alone. Look at this thing. And year to date, it's up 132%. In the last year, 178%, 6 months, 133%, 5 years, 3,000% in the last 5 years. Look at this growth. It's just insane, guys. And not only that, their revenue has skyrocketed. Let's go look at their revenue by first off, by year. So we're going to sit here and look at this. Going back to 2015, 4.7, 5, 7, 9.7, 11.7, 10.9, 16.7, 27, 27, $61 billion in the last year, not including last quarter. They just announced earnings for April. They did $26 billion in revenue just in the quarter. Remember, just in that quarter, they did, in all of 2023, previous year ending 2023, they did $27 billion. The revenue has absolutely skyrocketed for this company. And that's something unique to companies that have absolutely skyrocketed in stock price very quickly like this. We don't see this kind of revenue growth. I'm reading articles about people saying this will probably never be seen in history again. Obviously, you can't say that for sure, but this AI rush and AI boom has been absolutely incredible and insane. And it obviously shows right here. The price to free cash flow is 103. The 5-year number is 290. It shows how much this has grown. Look at this. 5-year average free cash flow of $9.6 billion. Last year's free cash flow, $27 billion. It's absolutely skyrocketed. Return on invested capital has skyrocketed. Every metric has done so well. But remember, just because a company is incredible doesn't mean any price is necessary for the company to do well. Just 3 or 4 months ago, I was in Florida with a very wealthy friend of mine. He was bragging about NVIDIA, and he even said to me, I have no idea what it even does. I said, do you know what their revenue was last year? He said, no clue. That's kind of concerning for me. Doesn't mean this euphoria can't keep going. It absolutely can. And doesn't mean that their fundamentals can't keep getting better and better. The question is this going to continue and have a permanent plateau? Because remember, a lot of companies can make these chips. They might be slower than NVIDIA has been to getting the market. But at some point, there will be more competition. And you see here, the gross profit margin, 73%. It used to be lows close to 60%, and now it's actually up towards of 77% last quarter. That's big time growth to see gross margin go up that much. Let's go check out the 8 pillars on this company. Guys, shares outstanding is up a little bit. I'm actually surprised it's not up more. If I were NVIDIA, I'd be printing shares like crazy. Why? Because everybody loves the stock. Might as well get as much money you can out of people for that one. I'd be printing money like crazy. Rather do that than take on debt. Print the money, keep it in your balance sheet whenever you can. Obviously, 5-year PE and 5-year price to free cash flow. We already discussed it. They're useless because their numbers are so much better than they were in the last 5 years. It's absolutely incredible what this company is doing. But remember, $60 billion in revenue, that's equal to what Intel did last year after falling 30% in revenue. I'm not trying to compare the two and say Intel's the same as NVIDIA, but just to keep in the idea of how much this company is, 45 times sales. That's a big number, guys. Microsoft's at 13 times sales with the same kind of margin. At some point, there's a price that's too high for everything. So let's see what analysts are saying for NVIDIA. Big growth, guys. They're expecting $25.65 over the next year, going to $45 next 4 years. It's actually not as much as I would have thought. I would have thought this would be much bigger jumps, but who knows? That's earnings per share revenue from $115 billion in the year ended March 2025 to $206 billion. Again, big growth, but not as much as expected for a company that's up 3,000% in the last 5 years, the majority of which has come in the last 2.5 years, 2 years of it. That's the big part of it. Because remember, let's look at this chart. Let's go back to this chart. The low in September of 2022, in October of 2022 was $108. This thing is up over 10x since October of 2022. That is 1.5 years ago, maybe 8 years ago. It's up 10x in that time. Again, can it keep going? Absolutely. Absolutely. And this company has proven they're a great business. The CEO and the company have announced that the big reason they want to do this was they wanted to make the stock more accessible to company employees as well as investors. Now look at NVIDIA, soaring high, $1,115 per share. On paper, it is going to make the stock go down by 10. It's going to go, if it was today, it's going to go to $111.50. This does not make the stock cheaper. The only thing that is happening is it's making the nominal price of a share a lot lower. Now, obviously, with a company like this, the FOMO can be huge. You have this fear of like, oh my God, this thing is going up. I got to get on board. It's a different kind of fear, but it's similar in the sense of when a stock is falling, you want out, right? They're both fears there. You sit there and worry about, is this company going to zero when it's falling? Am I missing out on gains when it's going up? They're both very strong emotions. We've all been there. We've all been there. Now, for me, I don't worry about these things. When I see massive run-ups very quickly, that doesn't bother me missing out on them when I don't think they're necessarily grounded in some sort of reality. Now, that's not to sit there and say that NVIDIA is not an incredibly profitable business. It's worth a lot more money than I originally expected. But who would have seen the AI part? Who would have been able to sit there and predict that that would happen? Just because you get lucky on that one. What I'm trying to teach here is a process. And that process says that every investment is the present value of every future cash flow you receive. The more you pay, the less your return's going to be. The less you pay, the more your return's going to be. So the question becomes, how do you determine those future cash flows? We don't know. The future is unknown. That's what makes investing an art and not a science. That's what makes investing so difficult. That's why we need margin of safety. So what I'm encouraging you to do, the fact that you're watching this video tells me that you're probably more of an investor and not a hype machine follower. You want to find a process. You want to figure out, why is this happening? Does that mean you might miss out on some very big run-ups? Absolutely. But it also means that you're the kind of person that says, hey, if a company's going to make X amount of dollars, if I can pay a cheaper amount of money for that, I'm going to do better in long periods of time. Absolutely. And that's what I'm trying to teach here. That's the process that you can apply to any investment you have in the future, whether it's stocks, real estate, businesses, whatever it is, these processes work. But the most important part of all this is the emotional ability to sit there and when you see a stock fall, say, I'm okay with this. My thesis is still the same. Maybe I should buy more shares. Or when the stock is flying high, you say, you know what? I think it's too much. I got to bow out of this. And you're going to be wrong on both levels. But the point is to apply the same process over and over and be able to be in touch with your emotions and control your emotions. And that's why we have this community. That's why we have all these tools to enable you to be able to do that. So if you want to get in better touch with your emotions, be able to handle this more and more, join our community, the link below. We have a great 7-day trial. Check it out. I guarantee it'll change the way in which you invest, and it'll make you a better investor if you properly apply these attributes and these kind of ideas to the investments you make. When you want to buy a company, what you need to look at is the market cap. Because if you wanted to own the entire company, that's what the market cap would be. And for a company like NVIDIA, it's $2.78 trillion. Okay, let's pull up a company like Berkshire Hathaway. Berkshire Hathaway, I'm sure many of you know, is the most expensive, and I put that in quotes, stock out there for $611,500. $611,500. When I was in high school, the stock was at $34,000. And a kid who was interested in stocks, I said, yeah, Berkshire Hathaway is $34,000. He goes, no, it's not. I said, yes, it is. Back then, you had to pull up the paper. He looked at it. He's like, oh my God, you're right. But here's the interesting part about Berkshire Hathaway. Look at the market cap, $880 billion. That is almost 70% lower than NVIDIA. Yet the stock price is 600 times higher than NVIDIA. Why? It's just a matter of issuing shares. The number of shares outstanding. Let's look at Berkshire Hathaway. Their number of shares outstanding in our income statement is 1.45 million shares outstanding. 1.45 million. Let's go to NVIDIA. NVIDIA currently has 2.47 billion shares outstanding. Guess what's going to happen? It's going to go to 24.7 billion after the stock split. All they're doing is issuing more shares. So let me give the example here. Let's say a company has 10 shares. You own one of them. You own 10% of the company. If they do a stock split, 2 for 1, they're doubling the number of shares, but also issuing a share to every shareholder. That's they double it. So now there are 20 shares outstanding from 10 to 20. But now instead of 1 share, you own 2. Before you'd own 1 out of 10 shares, that's 10%. Now you own 2 out of 20 shares. That's also 10%. Your ownership structure, your ownership percentage has not changed 1 iota. So please don't fall for the trap of thinking the company is cheaper. The stock price is lower, the company is not cheaper. They do this in order to make more excitement for the company, to get the stock going higher because more people can buy more shares and they feel like they're richer. I've got 10 shares now instead of 1. It's no difference whatsoever. And that is why Warren Buffett never did a stock split. He sat there and said, I want like-minded long-term investors. And if you're willing to spend tens of thousands or hundreds of thousands of dollars to be a partner with me, you probably have the right outlook that I have. Now, guys, what is the right price to pay for NVIDIA? Well, again, I'm going to show you my stock analyzer assumptions and you do what you want with them. Or if you're part of our community, you do your own assumptions. That's what makes the software so great. So I did 10, 20, and 30% revenue growth in the next 10 years. Just to let you know, 20% revenue growth is doubling every 3.5 years. That means in 10 years, it's going to double about 3 times, 8x revenue. That makes their revenue go from $60 billion to $480 billion. That's some big numbers there. Big numbers. I took their profit margin, 30, 40, and 50%. Now you might sit there and say with free cash flow. And last year, if these numbers can stay true, these might be low, right? But remember, margins mean revert. When more competition comes in, margins decrease. So yes, they've been first to market and their margins have surged, but I'm assuming they're going to have better margins than the past, but not quite as good as today. You might agree with me, you might not. It's up to you. PE, I put 20, 25, and 30. Guys, I think that's too high, but I'm just showing this here to show the valuation. And for my desired return, guys, this is where you put your margin of safety in. I didn't put any margin of safety here. I want to sit there and say, if I just want to match the market, my 9% return, because the market does 9 or 10%. But remember, you need margin of safety when you buy individual companies because the future is unknown. We're human and we make mistakes, and investing is an art, not a science. And not only that, though, if you want to just match the market, just buy a low-cost ETF. So to buy an individual company, you need a better return than that. I hit the analyze button. I got a low price of $230, high price of $2,400, middle price of $785. I just think it's overvalued. If you want to see the earnings reports from NVIDIA last week, click this next link. It'll take you there. Thank you.